Before we get started this video, I would like to send my condolences out to the families of Uvalde, Texas. What you've experienced is very tragic. I don't think there's very many people out there who could fully understand what you're going through. And I am truly sorry for your loss. No parent should ever lose a child. No husband should ever lose a wife. It's a very painful thing. I'm sure of it. And my heart breaks for you. I'm sorry. What's up, YouTube? My name is Uncle Smokey, and this is Uncle Smokey Stock Trades. And before I start this video, I would like to say I am not a financial advisor, and this is not financial advice. So please take what I say with a grain of salt and do your own DD. What's going on today, guys? Overall, weird, crazy last couple of days that we've seen after having a 10-day huge run. And we're going to get to that here in just a couple of minutes. But before we do, as always, we're going to talk about the indices. What's happened in the overall markets over the course of the last couple of days. So, as you have seen, over the course of the last couple of days, we did see a slight pullback in the overall markets on all three indices, but they made a really nice bounce, again, off that red line that I've drawn in the sand a couple of weeks back. And then today, after the FOMC meeting, the FOMC minutes meeting, we did see a nice little bounce. This was released at 2 o'clock, and basically just telling us everything we've already heard and know. And it ensured to the market that that is what is going on. Basically, the central bank said, we're going to continue on as planned. The market took that as a bullish indicator and ran north shortly after that for the last couple of hours of trading. As you can see here, we did see a green market overall. Energy sector, of course, we know has been green and will continue to be green as long as there's geopolitical issues and a recession in the forefront. Technology sector finished green, and overall semiconductor sector finished green. So, that's a little bit crazy, right? We finished red when everything else finished green. We actually fought against the market today. That's not something we normally do. Generally, we are with the market for the most part. We might, if it's market's red, call it 0.5%, we'll probably be down 4 to 4.5%. If the market's green 1%, we may be green 3, 5, 6%. So generally we follow what the market does. It's just our percentage up or down would be greater. And generally it almost always is in the stocks compared to the indices or the ETFs. Whichever way you want to look at it, you'll always see that the ETF will trade a little bit less of a percent than the actual stock will. And that's just because the stock's going to take a little bit more of that brunt beating. As of right now, going back over here, wait, got to go back to the chart. So, boom, SPY, still respecting that red line that I put up there a while back, as well as the Dow, and so is the NASDAQ. As a matter of fact, the Dow has made a pretty substantial run off of this red line that I drew a couple weeks back. It's been green for the last 3 days. NASDAQ currently bouncing off that line still. As you can see, we've got 1, 2, 3 full tests of this line as of right now, looking to make either that quadruple bottom or utilize this as the bounce point. And as you can see, we've got a doji candle right here. Generally, doji candles mean that it's a little bit of indecision and the market needs to make up its mind on what it's going to do. If we pay attention to our indicators on the NASDAQ, and remember I've been saying the NASDAQ is the one we're looking for it to make the biggest bounce the fastest. If you take a look, the RSI on the one-day chart is shooting straight up in a very neutral zone, but it's going towards that midline point. Also, you've got the MACD, which, let's see if I can make this a smidgen bit bigger. Look at that. MACD has crossed over the signal line, signaling that we are having a slight trend change. Basically, the bears are giving up. The bulls are starting to step in. We got a nice green bar in that histogram. Now, we want to see this, just like I've talked about with the actual tickers, we want to see this continue its momentum. We want to see volume step into the actual indice itself, and we want to see this just continue. A continuation of this trend to ensure that we're going to start seeing a little bit more of that bullish momentum and possibly break out of this bear trend that we have seen over the course of the last couple of months. Moving on into metamaterials. So, today, what the freak happened, right? Well, before we know what happened today, we got to take a look at yesterday. And yes, right now I am on the minute chart, and there's a reason for that. So yesterday we actually tapped the SSR list, I actually have that right here, right here, right here. SSR list. This was 5/24 of 2022 at 11:18 a.m. We struck the SSR list. What does that mean? Well, if you're a retail trader, that means that you can no longer short the stock on the up or on the downtick. You can only short it on the uptick. It's the uptick rule. Now, there has been put in play since 2010 a short exempt rule. Now, this sounds better than it really is. I'm going to read it to you for any of the new investors out there who have not heard me explain what short exempt is, what the SSR list is, and what the threshold is. So, the short exempt refers to a short sale order that is exempt from the price test of Securities Exchange Commission's SEC regulation show. The current implementation of this regulation contains a modified version of the uptick rule, which restricts the price of short sale orders on a security whose price is falling. The current regulation allows for a comparatively small number of restrictions, and within those restrictions are an even smaller fraction of exceptions to that rule. These exceptions are intended to allow brokers to best serve their customers in a panicked market. Now, they are not serving their customers like you and me. They're serving their institutional investors, the big money, the ones that need to make sure that the market moves the way they want it to. Understanding short exempt. Standard market procedures require security sales to be labeled as long, short, or short exempt. Short exempt orders are allowed even in circumstances where short selling may be otherwise restricted. These are statistically very rare, and most retail traders would not experience the effects of these restrictions or their exemptions because the modified uptick rule only kicks in under extreme circumstances. And the exemptions are largely targeted at institutional traders. That's right. The short exempt is targeted at institutional traders, which means they can still short it. They're allowed to file this filing that says, I'm going to file this short exempt. Now, what that does is it also takes away from the short listing. You know how when we say it's 60% short of the day, 70% short of the day, the overall volume, you're not going to see the short exempt in the short volume. When they're actually shorting it on the downticks and they file that as a short exempt, it doesn't go in as short data. It goes in as a failure to deliver. It's a completely different filing. So it's going to change the information that we see here very, very shortly. Moving back over to the ticker. So when this struck the short exempt, or I'm sorry, the SSR list right in here, it triggered it so they could no longer short it for the rest of the day and the following day on the downtick. Well, they kind of followed that rule for the rest of yesterday. Absolutely. They want to get their eyes off of them. But look what happened today. Wowzers. This is the 1 minute chart. I don't see a single uptick in here. Not a single one. I don't see any in here either. Yeah. No upticks. But it was shorted to shit. And you cannot tell me that this is all selling pressure. Remember, the people who hold this stock, the retail investors that hold this stock, they are not selling this. We are not selling this. We know what this is. We've been experiencing this. And in all honesty, if anybody did any selling on this, number one, it was probably a stop loss that got triggered, which this right here is an absolute stop loss hunt. All the way down like that, stop loss to the Fibonacci, bounces off of it. See how it barely broke through and then it bounced? This would have snuffed anybody out that had the sell point at 168.5. And again, algorithmic trading, as you can see clearly. Now, a question was brought up to me earlier today. What does this do? Will this kind of price action still follow the Fibonacci's? Well, as you can see, it kind of does, but it doesn't. So what happens is it pulls it down just below it. And again, we're triggering stop losses. That's what they're trying to do. They're trying to snuff people out of their position so they can get the shares that they want cheap, so they can start returning shares at a very low cost, covering under the radar, right? So that's what they're trying to do. And they're doing it by breaking the rules, by physically manipulating the stock down when they're not supposed to. But what you also want to pay attention to is we closed at $1.83 yesterday. Sorry for hitting that mic. We closed at $1.83 yesterday. And then today we dropped all the way down to $1.65. $1.64.7 would be the SSR list for the second day in a row. They just barely missed it. You cannot tell me that that was not intentionally done, algorithmically done by the hedge funds to stop literally 0.03% away from triggering the next SSR. Yeah, that was manipulation, guys. Straightforward. They drug it all the way down. They barcoded it for the remainder of the day, just barely scraping the new SSR list, and then away it went. And also, right here at 2 o'clock, when they struck that point, is when Powell's FOMC meeting minutes came out. And again, we started that same similar uptrend that the markets made, only we were a lot more choppy because there was a lot more manipulative price action happening here. A whole lot of sell walls being tossed up. You can just tell if you can watch the level 2, which you can't do right now, unfortunately. However, there's a bunch of people on Twitter that are posting picks like crazy. But if you watch the level 2, you'll see these large sell orders come in way above what the stock price is, and you're going to watch the bid and the ask. The spread is what that's called. You're going to watch the bid and the ask widen out. It'll gap out over $1, $2, $3, $4 at a time. In other words, somebody's putting in a high price up here at the ask, and somebody's putting in a low price at the bid, and they're very substantial, which means they're trying to squash the price from the bid down here. They're trying to squash the price over here. And it's, unfortunately, it works. It really does, because a lot of new retail investors do not see it the way we see it. They're stepping in like, oh man, this is a cheap stock. It's been on a great run, and we're just going to hop in on that run. It's called FOMO. They're going to hop in on that run, and we're going to ride this thing to the moon. And then it starts pulling back, and they're going, oh, wait, whoa. But we don't want to lose more than 10%, 15%, right? So that's what you saw between yesterday and today. Yesterday, definite stop-loss hunt with the movement of the overall market. When the market pulled down, so did metamaterials, but they took advantage of this movement. God, there's that nose itch again. I'm going to get you. They took advantage of this movement and kept the momentum going in the downward trend until, again, SSR was triggered. So I do want to say that today's short attack was brought to you in part by the short exempt rule and the SEC themselves for allowing the hedge funds, the broker dealers, and the institutions to be able to continue to short a stock even when they're not supposed to. So kiss my ass, SEC. Do your damn job. Anyhow, moving on out to the 1 hour chart, as you can see, we are still in an uptrend. We are still over top of that 200 MA line, and this is, of course, 200 candlesticks on the 1 hour chart. Notice we did push off that $2 mark. I did say this on Monday. Look for this to be a pullback point. Algorithms will trade this all day long the same exact way. If we're not slapping the ask and increasing the bid price, then they're going to continue to push it down algorithmically. And as you can see from this chart, look at those lines, look at the respect. That's how it was done. And in all honesty, I could foresee this actually continuing on just a little bit further. I think they're shooting for the 61.8% retracement line because they've done that many times over. As a matter of fact, if you go back in history, we're going to go up to the next time frame because it's a little bit easier. If you go back in history, this line right here, which it's this line, draw it all the way across, right there, bounces off of it here. Let's bring it back some more. Right in here. Pretty strong line right in here. It's a pretty tough line, that 61.8% retracement. It is. And I think that's where they're trying to get it to before they see another bounce. Call it the final dip before the major rip. And that's a very good possibility because as you can see out here on the 4 hour chart, it is lining up with that 61% retracement line, but that's the 50 MA. And a bounce off of this 50 MA right here would absolutely signal that we are moving north again. When the cross happens, and the stock can bounce off of those indicators, you're sticking with bullish momentum. It cooled off. It got drugged down by short pressure on the market sentiment, but this could have actually been good for us as retail investors because it didn't pull down so hard that it was insane. We're back in our channel that we were at a month ago, okay? Super good for us right here as far as we go. But what that did is it allowed for the RSI to cool down on the long time frame. Look at where that RSI is currently sitting in the 4-hour chart. We have pulled this thing all the way back down from way up here and barely pulled the price down, hardly any. It looks like it's a lot, but it's not. When in doubt, zoom out. We were all the way down here at $1 just a few days ago. We're back up here at almost 2. I'm super pumped about this, guys. Also, the reason why I'm pumped is because I know how this price action moved. This is all manipulation. They're just creating more synthetic shares the more they do this. So just keep that in mind. The more they short it, they're giving you better price points to buy in at, and they're just creating more and more synthetic shares, digging themselves a bigger hole. Moving out to the one-day chart, which is the final chart we're going to look at, we've got a slightly different change in the RSI here. We are up still a little bit, but we're back in the neutral zone. Again, showing that it's cooling off a little bit, and we want that. We want a little bit of cool-off period before we make that next step. I would love to see us break over 2 and have a lot of room in the RSI still to go. But here's the great thing. We're still over that histogram line. We have broke over the histogram line. We're staying there so far. Now, we did have a pullback a little bit on the histogram, but the MACD still above the signal. The signal's still cruising north. I'm very pleased with what we're seeing right now. Again, I ultimately just want to see these shorts get what they deserve, and it's coming. It really is. And while I'm out here right now, before I switch over to the Ortex, I want to cover VTNR really quick because I've been slightly touching base on this a little bit, and I do know the people in my Discord would really like to hear a little bit about this because this is like one of our big main movers. So VTNR, as of right now, has done a slight pullback like I said it would. I've been saying I'm looking for about $13.50 to $12.50. Do I think this still has more to pull back? Yes. Why? Because if you look at this trend channel right here, it has broke out of it and it's still sitting at the top. We are due for a pullback in the trend, and I would expect for it to pull back right around this middle line here. This is basically where I want to see it go. I am not fully back into VTNR. I do still have my options for several months out. I do have about 10% of my previous position, so that way I can watch this on my charts, and I'm not going to lose anything if it does continue to make a bull run. I'll still be able to make profits. I've pulled a ton of profits off when it tapped that $16 mark, like I said I would. Actually, I did it at $15.50. So, again, I'm expecting a little bit more of a pullback on VTNR. I'm waiting for about $12.75 to $12.50 before I re-enter my full 100% position. And that way, I'm locking in the maximum amount of profits I can possibly lock in that I feel comfortable with and increase that position that I've already sold off once. So, yeah, again, VTNR, I think it's got a lot on the table. This thing is going to go to the moon. So if you just want to buy and hold, whatever, you can. That's strictly up to you. But I'm a technical analysis trader. I trade off of TA, and I know what I'm looking at. I'm looking at currently the ability for this thing to pull back quite a bit more before it actually makes its next push north, its next hard push north, like this. It could continue in this consolidation trend for quite some time, to be honest. But where do I see this going? North. Far, far north. This could easily touch $40, $50, $60, $70 over the course of the next couple of years. But there's a lot of playable money that you can make right here in this ticker until it does that, just by following trends, just by following Fibonacci's, just by drawing up the indicators I've already shown you and taught you how to do. So, VTNR, done. Moving on. Okay, we talked about that. We talked about that. Pre-markets. Pre-markets are looking pretty green right now. Pre-markets, we are at up 101 on the Dow. We might have already done all this. I don't remember. We did, I'm sure. Anyhow, moving on out. Ortex. So, let's hit refresh. Let's make sure we've got the best data possible. Well, what do you know? A little bit ago, this thing said 4.5 million shares returned. Why did it say that? Because a lot of times what you're going to see is a lot of people will report that they're returning shares when they're actually swapping them. They're swapping the debt share. And it'll look like it is returned shares on Ortex until all the information clears itself up. So what do we got here? Utilization is currently at 100%. The cost to borrow has been at a steady incline. That is 47.04% cost to borrow. That means it would be 47% increase on the overall cost of the stock from what the shorts borrowed it at. The days to cover all the shares on loan is 11 days, and there are currently 56.75 million shares on loan. That is 22% of the overall free float, as far as they know. And then Ortex is showing that the current estimated short interest percent of the free float is about 17.5%. And again, they have recently corrected these numbers to match up to what it looks like it should be, but what they don't do is they don't factor in any of the institutions that are super bullish on metamaterials unless they own more than 5% of the stock. And there's a lot of them out there that do not own that. And they're crazy bullish on metamaterials. Plus they don't account for us crazy ass apes that'll diamond hand the shit out of this thing until it hits $100, $200, $300, right? Which that could be a long time away, but we will do it. Anyhow, moving on. The current value, which has been steadily increasing, the current value of the short interest, according to Ortex estimates, is $82.7 million. And that went up, even though we've pulled back, because the cost to borrow has stayed high. So, intraday cost to borrow, currently the max is 261%. The cost to borrow average was at about 92%, and the minimum was at 66%. That was at any given time during the day today. As you can see, that they did borrow 1.5 million shares today after returning about call it 2 million shares if you round up. Also keep this in mind. As you can see, there are 56.75 million shares on loan. They're only saying that there's about 45 million shares actually shorted into the market. That leaves 11 million shares for them to just return at any given time. They can do as they please with them. And that will look like they're returning shares. They're not covering. They're covering nothing. If you were to pull up the average numbers of days on loan, looky there. As of yesterday, they're at 93.7 days. That's not coverage. That's extension, guys. That's extension. That's all that is. They're continuing to hold their short positions longer and longer and longer. And as they pick up new short positions, or as new people start stepping into the stock, creating new short positions, they're creating a synthetic share. Just remember, every time a company shorts the stock, if they do not cover it, so retail investors, we have to cover. If not, we lose money. But an institution, not so much. If they do not cover, if they do not produce that, they've then created a synthetic share, especially if it's a borrowed share that they shorted. Okay, because now I own the share. The broker dealer took that share and said, well, I can take that share. You have your share lending on. So if you've got share lending on, shut it off. But if they take that share and they lend it out, now you still own that share, but so does somebody else. So does somebody else. Now you've got a synthetic share. Every time that happens, two shares are now synthesized because now they shorted. Great. Anywho, moving on over. Yeah. Moving on over to Fintel. Let's hit refresh. We like the refresh button, especially on Fintel. Unless it takes me all the way out and I hate it. All right, so Fintel is showing an increase in days to cover as Ortex has. 10.28 days to cover currently, and they're showing right around that same 17.58% short interest. Obviously, they have changed their numbers too, and that is because when Ortex found the discrepancy, they sent it out to S&P Global, and S&P Global then sent it out to everybody else. Currently, we are number 10 out of the 5,500 stocks on this list at 95.36 out of the 100 percentile. There is currently, and this was as of 12 hours ago, 55,000 shares available to be lent from a leading prime brokerage, which means there ain't shit available. When you're talking of outstanding shares of right around 300 million, and the free float is, if you calculate it the way they do, of right around 200 and I think it's like 40 million, something like that, 230 million. 55,000 shares is nothing. Now, with that being said, if you factor in all of the other things that we know out there to be true, all the institutions that hold, all of the insiders that have shares that aren't quite listed because they're MMAX or whatever it may be, or they're in options, whatever it may be. You know, there's a lot of shares actually locked up. The float is locked down. We know that. Ken let out 170,000 individual investors at CES last year. Promise you there's probably more in that, but I've done the numbers subtracting a huge number of that, like 20% off of that. So in all honesty, there's a really good chance there's a lot more. Anywho, short borrow fee rate according to the FINRA was at 109% at any given time during the day today, and dropped down to 65.96%. And it will start out the day tomorrow at 65.96%, according to the FINRA. Short volume off exchange provided by the FINRA, according to today's numbers, total FINRA volume was 2.5 million shares off exchange volume, guys. That was about half of the overall volume today. And that was 52% of that was short. 52%. Now, we came down pretty damn hard, almost a full 10%, and only 52% was short according to the FINRA. This is where the short exempts come into play, and this helps them a ton. Because they were able to file a lot of that short exempt, that what probably was 75 to 85% short volume is now only 52%. Because of that reason, it does not file as physical short volume because it has not been registered yet. It will go in as a failure to deliver. That is how that will register. And we will see that show up in a couple of weeks. Anyhow, so I do not take this as a true number. I would be willing to bet we have got way higher short volume than that through the dark pools and also through the lit exchanges, to be honest. As a matter of fact, let's go over here and take a look at Chart Exchange. Let's hit refresh, see if they've got any updates. And of course, we want to flip our percentages back over, and they haven't. They're actually showing similar to what Fintel is showing. And again, I completely disagree with this because of the fact of the SSR rule. The SSR rule actually benefited the brokerage dealers and the hedge funds and the institutions in this instance because they were able to completely cover up the huge short attack that they made today. That is freaking BS, guys, I'm telling you. So we're still holding up there pretty high as far as it goes. 61.23% of the overall volume has been short over the course of the last 30 trading days. That's right. Almost 62% of the overall volume is short overall. Manipulation City, I don't care who you are. And again, I've stated this many times over. As the volume increases, you'll notice that the overall short volume decreases. And you'll see that. 6 million, 47. 6 million, 50. 5.5, 52. 2.5, 58. 3.5, 57. 4 million, 62. As you can see, when you had a little bit higher volume, the numbers dropped. Lower volume, the numbers increased. All right, so I think we're done talking about the manipulation levels of it for today. Let's go ahead and move out to Twitter. What has Metamaterials been doing for us lately? Dr. Panos Cosmos to deliver keynote lecture on new hashtag medical technology for hashtag stroke detection. If you click this, it will take you to this right here and explains everything. They will be in Marrakesh, Morocco. Sure, I've got a slick here. Okay, AES 2022. They'll be in Marrakesh, Morocco between 24th and 27th of May, which is, over, of course, today, yesterday, in the next couple of days. Tomorrow, Dr. Panos will be talking, will be speaking. Now, I cannot cover this. I won't be able to do that at all. I don't even know if they're recording it, to be honest. I just found out about this today. In all honesty, I did not even know. So, anywho, awesome. We're going to be on the lookout for this. Maybe somebody will get this recorded, or we'll see some kind of conference details coming out here in the near future. If you'd like to read more about it, go to metamaterials.com into their news feed, and they will you can read all about it. The next thing they put out was our co-founder and CSO at Timorous presented roll-to-roll manufacturing of nanostructures today at the Materials UK conference. Hashtag transparent TV antennas using hashtag nanoweb. Learn more about nanoweb here. Select this. It takes you directly to their website. Right there. And this here, you can read through here, and it'll tell you all about nanoweb, roll-to-roll, all that stuff. As a matter of fact, if you really wanted to, you can learn everything you want to know about metamaterials right here on their website. Everything from their technology, the solutions they're trying to provide, every single product they currently offer, and you can even find out all the investor information that you want to know about. Stock charts, trading signals, all that good stuff. It's all right in here. Anywho, also you can get a really good bio on all of the leaders, all of the directors, all of that stuff right here in the Meta website. So feel free to browse through that. There's a lot of great information in here that can absolutely educate every single one of you new investors out there. And of course, it just tickles our fancy for all of us old investors, right? We love this site. Anywho, that's what I've got for today. I hope this video struck home for everybody. I hope you understand what you saw today was absolutely intentionally done from hedge funds to manipulate it down to scare people out of their positions. This is full-on scare tactics. If you know what you hold, you're a diamond hand ape, and you're ready to frickin' roll to the damn moon, you will not sell. You will not set stop losses over stupid piddly shit freaking drops like we saw today. This price action day was garbage. Don't worry about it. Ignore it. Set an alert for when this thing hits the moon level that you want to be at, and ignore it until then. Come back and see me though, because I like to just bullshit and talk on the airwaves. With that being said, like, subscribe, make sure you're commenting for the algorithms below. That's what really helps these videos get out into the airwaves. It really helps people learn about metamaterials, where it's been, what it's doing, and where it's going to go in the future. What is metamaterials trying to disrupt? Everything. Peace, guys.